We're here in the beautiful Paris and we meet interesting people like Mark Yusko from Morgan Creek. Nice to meet you, Mark.
No, nice to be here. Thanks for having me on.
All right. Morgan Creek Digital, of course, the most famous employee is Pomp. But perhaps for the broader audience, you can give a profile of the company.
Yeah, just real quickly. So I formed Morgan Creek Capital back in 2004. We were more of a traditional focused firm, helping institutions get exposure to alternative investments, hedge funds, private investments. And a couple of years ago, ran into Pomp through an investment we did in Lyft in a private round before, obviously, the IPO. And then about 6 months later, we started spending more time together and intersected on Twitter. And the rest is history, as they say. And we formed Morgan Creek Digital last year to focus on building investment products for the digital age. And we'd like to ultimately become one of the trusted advisors in the digital age. First fund we launched was a venture capital fund focused on doing infrastructure.
And besides the venture capital fund, who actually invests in the equity of these companies, you have also an index fund.
Yes. So we did the Blockchain Opportunity Fund to do infrastructure, and then we did a joint venture with a firm called Bitwise to create the Digital Asset Index Fund, which we hope will become the S&P 500 of crypto, and that institutions will eventually find their way there. Institutions today are quite comfortable with equity investing and building out infrastructure, but they haven't quite got comfortable with crypto yet, but they will.
All right. Of course, in the news was earlier this year that actually two separate pension funds from the state of North Carolina, I think.
Well, we're based in North Carolina, but Fairfax County, Virginia, up near DC, two pension funds, a police pension fund and a public employees pension fund, invested in our fund. First public pension funds to do that. Pomp talked a lot about that. But what the big deal about that is, look, endowments have always been the leaders, the thought leaders. So Yale and Notre Dame and UNC investing in crypto wasn't really that controversial. But for a public pension fund, it was a big deal that they crossed the chasm and started investing in the infrastructure. And what was really interesting is we were meeting with the board of that pension fund, and at the 2.5-hour meeting and get to the end, and the policeman who was the representative for the union on the board said, so wait a second, I have to tell my guys that I just voted to put their retirement assets in drug dealer money? And we said, well, no, you're not going to tell them that, obviously. You're going to say that, look, as a fiduciary, you look out at the prospects for the traditional markets, stocks and bonds, and it just doesn't look very good, low single digits. You have to make 7% returns to achieve your beneficiary status. So you're looking for alternative alpha, and you see alternative alpha in things like the infrastructure around making this great new technology of blockchain available to the masses. Right. And he said, oh, I can support that.
Nice. It was quite a long process. I mean, lots of talking. It took almost a year or over a year.
It took about 9 months. And what was amazing about it is the very first meeting we did with them. So Pomp went up to DC and met with the chief investment officer. And literally in the middle of the meeting, on the spot, she committed personally to the fund, which was pretty amazing. And in fact, he walked out of the meeting and our sales guy said to him, that will never happen again. It's never that easy. But it was. And it did take 9 months to go through all the process, the 200-page due diligence questionnaire, the multiple meetings with the board, the 2.5-hour grilling by the board. But in the end, both pension funds came in. And it's exciting because, as we talked about before coming on air, you need one to come in, and then a second will come in, and then suddenly they'll all notice that they're wearing cool hats, and they want a cool hat. And so then more will come in, and I think that's where we are. We're at that early adopter phase, and now we need the early majority to come in, and we're still a ways away from the masses, but we need leadership from great institutions like Fairfax to break down the walls.
And actually, Harvard also invests in Blockstream, so that's or block stack, sorry.
Stack, yeah.
So that's also a new step.
No, look, Harvard is got great leadership. You know, Narv is a great CIO, and they've got a great team. And I think what they realize is that this is inevitable. You know, this change, and you want to invest with the best. And they've got some great venture capital talent that they've invested with, and so they made a co-investment directly in a token, which is fantastic, and I think is also going to set an example for others to follow.
We talk a lot about institutional money coming in, but it is a very slow process. So what's your opinion on the topic of, because we see Fidelity, Buct is coming, so.
Yeah. Look, I think it depends how you talk about or how you think about institutions. There are certainly institutions like Fidelity and other institutional investors who have made the move, built teams. But then you've got to think about, well, what other types of institutions are there? You know, are the banks going to come here anytime soon? No, probably not. Right? They feel threatened a little bit. Are other financial institutions? You know, we had the big news last week where Paris passed the new law to allow insurance companies and others to invest directly in crypto. That's exciting. In fact, what's exciting about that is that's the first time regulators are out ahead of the masses, where usually it's you and I saying, hey, regulators, catch up with us. And here are the regulators saying, come on, institutions, come with us. And so I think that's great. Institutional investors, endowments, foundations, they're already there. Big individuals, what I call individuals, you know, individuals with institution-like capital, they're already there. The ones that aren't there yet are corporate pension funds, public pension funds. There's a little bit of sovereign wealth money, but there's a lot of activity. We're talking to a very large sovereign wealth fund, and we've had 4 or 5 meetings with them. I think it'll probably take us 4 or 5 more to get them to move, but the fact that they're already talking about it is very exciting.
Is it like a charity fund, the sovereign wealth fund, or?
Oh, a sovereign wealth fund are funds that are created not with any beneficiary, but just with monies from a central government. Like the Norge pension fund in Norway takes their oil revenues, or a big fund in Abu Dhabi or Saudi Arabia that takes oil revenues. So they're state-backed funds, sovereign wealth funds.
And what can be the effect? I mean, we take this glass ball. What will be the effect? Because it's still a relatively small asset. We have 150 billion.
No, that's the exciting part. Is this is a tiny fraction of total global assets, and you know, I have this great tie, and it's Bitcoin on one side and gold on the other with scales. And just Bitcoin gold equivalents, right, would be 7.4 trillion with a T dollars of market cap, which would mean a Bitcoin price $400,000 or $500,000 per unit. Now, people say, well, that's ridiculous to talk about that. I'm like, no, it's not, right? All big things start small, and all technology evolves over time. So when the internet started in the early 90s, nobody thought it was going to be important. You know, Paul Krugman said it will never be more important than a fax machine. It's a little more important than a fax machine. And then when mobile phones came out, nobody really paid much attention because you couldn't do that much on them because you could talk and maybe send a couple texts. But when the smartphone came out and when Google bought Android, people kind of laughed at them in 2005. Well, now they don't laugh at all because Android powers 80% of mobile phones around the world. It became a gigantic market. So here we are on this next evolution of technology where the blockchain era becomes the operating system for the Internet of Things and hundreds of billions of connected devices. And yes, it's only $150 billion today, but tomorrow it'll be 300 billion and the next day it'll be 1 trillion. And you know, years from now we'll look back and say, wow, how did it get so big all of a sudden? Well, it gets big because of the S-curve of adoption. Yeah. And we start growing exponentially. And you know, people forget, if I take 30 steps across this room, right, linear steps, I can get across the room. If I take 30 exponential steps, I can go around the world 3 times. Yeah, it's kind of cool. Yeah. Exponential math is really cool.
And so you really think that a Bitcoin can be like $300,000 to $400,000 per unit?
I absolutely do. Now, whether it's a decade from now or 2 decades from now, or I don't know, and that's not really as important to me. What's important to me about Bitcoin is owning a piece of the network. Because the way networks work is they grow in this exponential fashion. And once the price starts to rise and people start being drawn into it just because of price movement, then it moves to speculation. When it becomes more focused on investment and people are putting capital in because they want to own a piece of the network, that's when it can get big in a hurry. Because that's when a sovereign wealth fund can come in and say, I want to own $1 billion or $2 billion of this network. That'll change the supply-demand imbalance from, people speculating with $100 or $1,000 isn't going to change the long-term value of the network. But when big users start to say, hey, I want a portion of my fiat exposure to be hedged against a calamity in the financial system, that's when Bitcoin, for example, could get very exciting.
Just another question, can it be also geopolitical effects? Because, for instance, if you talk about USA, they have some countries, they have sanctions against, like Iran. Yeah. But for instance, when Iran decides to buy, I don't know, Bitcoin, like 20% of all Bitcoins, then we have a political issue, perhaps.
Oh, look, geopolitical challenges and relationships are clearly going to play a role in this whole ecosystem development. And to your point, what sanctions are is a form of censorship. And the nice thing about Bitcoin and other crypto is they are censorship resistant. And so they provide a way for people who are being oppressed in some way, whether it's Venezuelan people, by the Maduro regime stealing all the wealth, and those people now saying, hey, local Bitcoin is a way for me to actually have a store of value because my bolivars are becoming worthless. Or the Iranians saying, hey, I'm going to go buy oil from China, but since I can't use US dollars, I'll just use Bitcoin. All of these things will happen, and the necessity is the mother of all invention. Yeah. So when you have necessity, when you need something, you'll find a way to make it happen. And what I find interesting about coming to an event like this, where you get 1,000+ people, entrepreneurs and inventors and people who are building things, what you get is an exchange of great ideas, and those great ideas become those use cases or those tools for the people who need a solution to act. And that's what gets very exciting.
Last question, are you agnostic as a fund? I mean, some people say, okay, we don't like Ripple, for instance, because it's centralized, or we don't like this, we don't like that.
Yeah, so if you think about in our venture fund, we're agnostic, and what we're just looking for is great entrepreneurs, great talent, and great ideas. That's what we want to back. In our digital asset index fund, we actually do have 2 rules, and those rules are taken right out of the playbook for the S&P 500. We want to be the S&P 500 of crypto. And what does the S&P 500 do? They say you have to have the majority of your stock freely float. All right, so we then exclude Ripple and Stellar because the majority of their tokens do not float. They're controlled by some foundation. Now, people get upset about that, but we have to have a criteria. And the second criteria is we have a committee that determines what goes into the index. The same way the S&P 500 has a committee to say these are the 500 companies that best represent the future of American business. So they can kick out GE and they can put in Twitter. I don't know if that's a good idea or not. It probably is a good indication of the future as opposed to the past. GE was important in the past. I think Twitter will be important in the future. So that committee structure and that free floating criteria are 2 really important things to our digital asset index fund.
Right. So Mark, thank you for your insights, and also all the best with all the activities that Morgan Creek is pursuing. So
No, thanks for having me on, and next time we'll have to do it at your home base, which looked pretty fun when you and Pomp were doing it from the house.
Yeah. Okay. Thanks a lot.
Thanks.